Thank you for coming to this next panel session, Venture Capital and Private Equity in Cannabis. My name is Scott Greiper. I'm the president of Viridian Capital Advisors. It's pretty incredible that Yale University is holding a Business of Cannabis event, so congratulations to the school. This industry, for those of you who have been in it or are new to it, is insane and getting more insane by the minute and by the edible. And I had somebody tell me, an investor I was visiting about a year and a half ago, you know, I think it's too late. I think the industry has passed me by. And since then, there's been about $5 billion invested in the industry, about $1 billion that's come in the last couple of months. So it's not too late, but it is getting later. There's a Yogi Berra saying there, I can't really remember it, but somebody from New York, it's getting late very early around here or something like that. So this is a panel of investing in an industry that is federally illegal, where there is no interstate commerce, where there is no mortgage financing, there is no commercial banking. It is not easy. And any operator of a legitimate cannabis company will tell you how challenging and how complex, how exciting, and the big upside. But this is an extremely challenging industry. 280E on the tax side. This is, you know, any time there's a cloud between federal illegality and state legality and state rules, that's where the opportunity traditionally is, and that's the truth here, but this is not easy stuff. So you got to be careful out there. We have some of the best minds on the investing and legal side of the industry. I'm not saying that promotionally, it's true. I'm just going to state who's up here. I'm not going to read their backgrounds. You guys can introduce yourself individually, and then we'll get started. So we have Eneman from Casa Verde and some other entities I'm not even aware that you're involved with, so I'll just stop with Casa Verde. You can elaborate on that. We've got Lauren Rudick, who is General Counsel to Women Grow, and also in Hiller, her own firm. We've got, is Emily here? There's Emily. We've got Emily Paxhia from Poseidon, and, drum roll please, Mauricio Agudelo from Dioscorides Global Holdings, yes?
Correct.
All right. I'm going to get started with 2 minutes to give you a sense of the acceleration of the capital markets in cannabis and the amount of capital, the size of capital, the global capital that's coming into this industry, just to kind of set the landscape. So this is data from the Viridian Cannabis Deal Tracker. If any of you subscribe to that, this is a database that tracks all of the capital markets activity in cannabis, private capital, public capital, and M&A. So this is a 2016 to 2017 chart. The hockey stick nature of it reflects the amount of capital coming in. We track public company, private company, investment, and M&A activity, US, Canada, Australia, and Israel. 2014, $148 million in capital we tracked. 2015, almost $1 billion. 2016 came down until we got closer to November of 16. Has nothing to do with when Mr. Trump was elected. It has everything to do with California going rec, Massachusetts going rec, Florida legalizing, you know, the growth in the market, particularly in California. And there was a huge increase in the amount of capital came in. 2017, we had a 2.5 increase in the amount of capital that came in. In the first month and a half of this year, we've almost had more capital come into the industry than all of 2016, just to give you a sense of scale. This is the breakdown of the capital in terms of debt equity. You'll see that there's been a gradual but clear transition in debt financing to equity financing. There's a lot of underlying factors driving that, but in a nutshell, to me, it is a change in risk tolerance. From the initial money that came into the sector, 13, 14, 15, beginning of 16, that wanted in, but wanted the security of being a lender, wanted a lien on assets, wanted downside protection, to now people are chasing the upside of being an equity shareholder. So it's really important, this evolution in the industry. You can see the increase in the deal sizes. So in the first quarter of 2016, the average deal size was $1 million. The average deal size in Q4 of last year was $11 million. Up in Canada, the average deal size this year is about $100 million. So unfortunately, in the greatest country in the world and a country of innovation and supposed progressiveness, Canada's kicking our ass. I'm just going to move on. I'll go through this last slide. I know I broke every cardinal rule of too much crap on a slide, but there's just a lot of crap to talk about. But here's where the money is going. So we've broken down in the industry into 12 different business buckets, really the products, technology, services that are offered in the marketplace. Here's where the money's been going, and the breakdown of those sectors in terms of debt and equity. The clear leader over the past 3 years has been cultivation or retail. And that's very simple. When a new state legalizes and you apply for licenses and you get a license, you have to attach the grow facility, the real estate that's properly zoned. You've got to attach the dispensary, the real estate that's properly zoned. And you got to build it out, and you got to do tenant improvements, and that's where the first capital is going, or most of the capital is going. Second to that is biotech and pharma. These two have been the market leaders over the last 3 years in attracting about 65 cents of every invested dollar in the industry. I'm going to stop there. I do have one announcement I was asked to make. At 3:50, everybody goes down to the Zhang Auditorium for the 4 o'clock session. And with that, Evan.
Are you able to hear me, or should I grab the mic also? Good? So Evan Eneman, if you sat in the previous branding and marketing panel, you know a little bit of my background. So managing partner of Casa Verde Capital. We're an early stage VC focusing exclusively on ancillary opportunities in the industry. I also run our creative company called Flower Shop, branding, marketing, and PR, as well as a professional services firm called Elo, where we focus primarily on accounting, tax, and various advisory services. So we look at, or I look at the industry fairly broadly when it comes from an investment perspective, either as an investor or as an advisor to a client. We've seen both sides of that across the industry, but from an investment standpoint, we focus on ancillary.
Cool. Hi, everyone. Can you hear me? Yes? Yep. Okay. My name is Lauren Rudick. Those of you who were there this morning know that I'm a partner at Hiller PC, a boutique law firm in Midtown Manhattan. I'm one of the lawyers that's suing Jeff Sessions in the DEA in the Department of Justice. Hopefully get a declaration that the Controlled Substances Act, as it pertains to cannabis, is unconstitutional. Excuse me, but when I'm not suing the government, I represent investors and startups in the industry. My very first clients in the cannabis space were family offices and angel investors, not the funds that they were associated with, but the individual principals associated with those funds. So my first foray into cannabis was through investment and learning about due diligence and identifying areas of legal exposure and figuring out how that factors into valuation. And there's so much opportunity. So welcome and thank you for being here.
Hey everyone, my name is Mauricio Agudelo, and I'm the Managing Director of Dioscorides Global Holdings, a private equity company in Midtown Manhattan, probably not too far away from you. We focus on the international medical cannabis market, so we were very excited about opportunities in the U.S., but as Jeff Sessions and the financial, tax, and legal issues that that affect the entire industry became much more prominent, we decided to focus our investor dollars and our research bandwidth in Europe, Australia, and South America. So maybe we'll have complementary just ideas on how the rest of the world is looking at cannabis at the moment.
Hi, everybody. I'm Emily Paxhia, co-founder and managing director of Poseidon. We are in our 5th year of investing in the cannabis industry, and the way we've kind of approached it is a little bit differently, where we kind of identified a gap between where people would want to be deploying capital into the space and the companies would need capital on the private side. And so we really did focus in on a lot of the ancillary components of the industry where we saw gaps. Back when we first started this portfolio, there wasn't a whole lot of research. There was kind of broad industry trends, but there wasn't what we have now, like point of sale research or these kinds of more in the moment research that we've got. But we kind of looked at the whole ecosystem of cannabis and looked at the gaps in the opportunity spaces, and that's where we decided we wanted to play, because we knew the infrastructure around that, like seed to sale tracking, compliance, data, business to consumer technology platforms would all be necessary in order to grow the industry. And so that's kind of the approach we've taken to it. And it's interesting, when we started, we were investing in really early stage companies that were basically almost pre-revenue and just concept stage because of the nature of the industry at the time. And it's interesting how Scott was pointing out where the allocation of dollars are in terms of the cultivation and biotech. That happens to be places where you can put a whole lot more capital to work up until this point. But now we're seeing the places where those technology companies, those kind of ancillary companies, are growing along the maturity curve along with the rest of the industry. And so I think that's why we're seeing more dollars going into investment on the private side of the industry and those other parts of the space, because those companies are now doing raises of greater size. So our investment thesis is now also shifting along that maturity curve with the rest of the industry. And I'm just really excited to see all of these metrics and data points that we have now showing that this industry really is proving out as a maturing and growing industry.
Thank you, guys. So to jump in with the first question, you know, an emerging market, an evolving marketplace like cannabis would traditionally be a place for the Sand Hill Road venture capital crowd to make early bets, lend advice, replace the CEO with their guy, and build businesses and exit them. And in fact, we haven't seen that at all. Tell me if I'm wrong. I think there's been one. Benchmark Capital is, I think, couple. But generally speaking, there has been an absence both of the traditional buy side and the traditional sell side in this industry. So what's different about it? What's scary about it? What's challenging about it that's keeping out the buy side? And how and if will that change? Evan?
What's scary about it? Legal reputational risk. Why larger institutions haven't made investments is primarily because they can't, not because they don't want to. Their LP agreements preclude them from, whether it be vice industries or you know, cannabis in particular. So that just fundamentally they can't make these investments. Most of the principals of all those firms, those that we have co-invested with, those that we've brought deals to your point, many of them are investing directly, just not through their institutions because they can't. So I think from an institutional standpoint, we've seen a few that have made investments on the ancillary side. You know, Fidelity probably most notable with their investment in Pax. So it's there, it's happening, it's taking longer because you have significant risk to either their broader portfolio, their brand reputation overall, or just the uncertainty around where regulation is heading. I'm sure a lawyer can give more clarity around that than I can, but that's just what we're seeing. I mean, it certainly, from our perspective, hasn't slowed down the market at all, and in fact, it's been accelerating, even with the utterances of the administration at this point.
I think I couldn't agree with you more. You know, the venture capital firms that we've seen, the investors that they traditionally have are unwilling to support those funds in these investments. So they felt a little bit, you know, strung in that regard. We definitely need legalization to continue. You know, we have this trend of legalization with 30 states being medically legal, 44 if you include CBD only, although I really hate CBD only laws. You know, 9 states that have legalized now for adult use purposes. And all of this has been in connection with a series of governmental pronouncements where they've sort of eased up on enforcement against state compliant actors. So, you know, it's unfortunate that very recently Sessions pulled the Cole Memorandum, which was sort of a basis upon which businesses could transact in the cannabis industry and feel somewhat safe from federal prosecution as long as they complied with state law. And now we no longer have compliance with state law as sort of the benchmark as to how U.S. attorneys are going to exercise their discretion in targeting for enforcement purposes, targeting for prosecution and enforcing the Controlled Substances Act. But nonetheless, you know, the Department of Justice has been defunded with respect to prosecution against state legal medical businesses. And we have the Department of Treasury that's scrambling now to try and figure out how they're going to continue to bank cannabis businesses. I know it's not a tremendous banking industry, but nonetheless, the U.S. Treasury has instructed them on how to bank businesses that operate in compliance with state law. So with more people taking advantage of those federal pronouncements, we have more confidence. And I think, you know, with California being, the 5th largest economy in the world after Brexit, you know, 25 million Americans having access to legal cannabis, that's a game changer. We're going to see things change very, very quickly.
Yeah, I think that, you know, what we're seeing is that there's a an opportunity for individuals and family offices to enter the market and to take advantage of those early stage investment opportunities where investment mandates or portfolio prohibitions have disallowed the large institutional players from coming in. Small bands of investors are cobbling their assets together, and where they might have formerly been able to lever up a portfolio, it is all cash on cash investments. Even in the rest of the world, even in in Europe, where our portfolio is more or less concentrated, we have access to banking services from large institutional investment banks. Our depository services are with very well-known, reputable institutions, but even there, we can't lever our investment opportunities. So you'll see an acceleration, a deep velocity of money come in when the lending part of the financial system catches up to the small family office, hedge fund, and VC actors in the space. That's when I think that you'll see a lot more. You'll see an exponential growth in the investable opportunities and in the investors that are coming into the space as well.
I'm seeing more VC activity actually in the space than ever, which is interesting because I think that Evan made the good point about their LP agreements and why that precluded it from participating in the past. But at this point, I've seen some groups carve out a certain allocation that they're allowed to put towards this industry. And then furthermore, I've seen some people who've gotten mandates that they really do have to start looking at the space because being based in San Francisco, I get to go to a lot of Silicon Valley events and I get to see how our companies are stacking up against traditional tech companies. And frankly, the metrics, it is coming off a low base, I have to say that, and it's not as competitive of a space in terms of some of the companies that exist in it. But the point remains that the key metrics that we're seeing in these companies are outperforming at their stage of company a lot of traditional tech sector companies. And so VCs by nature are very interested in getting into something that's ramping up and growing. And so for them to just look away and not participate is really challenging. And I'm really excited to be investing alongside some of those groups because I think that they do bring some structure to the deals that's really refreshing and also puts these companies on a path to continued growth and continued access to capital as they grow and expand. So,
thank you, guys. So we have 3 direct principal investors and then a council, 2 investors. So within the sectors that you guys choose to work in, what are the metrics from management to business planning to business modeling that are no-goes for you, and what kind of opens the door to start the conversations?
Money. No, for us, it depends actually a lot on what aspect of the industry you're in. If you are a SaaS play, we're really interested in different metrics like dollars processed across the platform, GMV, MRR, all of those different metrics, or for example, if it's a human capital technology company, like heads on the platform, things like that. Those are the kinds of things that we're looking at. But if it's a cultivation facility, if it's a distributor, we're looking at different metrics around revenue and potentially around, their cost of goods, their way that they're producing the product, the efficiencies around that. So it does really differ in this industry when you're thinking about whether it's plant touching or not plant touching, and then the way that company is approaching the industry.
Yeah, go ahead.
I was going to say that, we look at all the same metrics that you would look at for any other agro-pharmaceutical business, but the thing that our group looks at that we're very mindful of is non-financial considerations like the internal importance it's given to compliance, the reach and access to government actors, regulation, or your relationship with your regulator in many of these states is imperative not only to licensure, but to the ability to operate independently and to be able to bring new products into an existing market around the world where they're seeing for the first time that shift from a black market to a regulated market. A lot of the times the regulators are treating this as a case of first impression. They don't know what they're doing either. So they look to companies that do have an understanding of how to comply in their domestic and home domicile states, and hope to achieve some clarity on on what they, how the product can be cultivated, stored, distributed. What are the major concerns that any particular partner in the supply chain has seen before, and they're looking for us to help inform them. So I think that when we look to invest capital, we look to the sobriety of the group that runs the operation, and their dedication to compliance and to internal governance in the organization. We don't like top-heavy, key man dependent organizations where it's just one guy that if he steps off a ledge, gets hit by a bus, or does whatever, one of those really scary insurance-related acts that makes investors a little bit nervous. We want to know that there's a second person there that can take the wheel, that can help guide the organization through the growing pains of being an early stage, not only company, but sector. And so we often look to the non-financial considerations before deploying dollars.
I really love hearing that from all of you. But definitely, like to echo what Emily said, profitability, scalability, indispensable. But I couldn't obviously impress upon you all enough the importance of regulatory compliance. If you're in the cannabis business, you're in the business of regulatory compliance. And a team that embraces that culture is so different from a team that does not. And I think, what you were referring to really we call corporate hygiene. In terms of respecting the corporate form, making sure that you abide by your organizational documents, that the relationships between owners and managers is very clear. No internal squabbles, no issues with employment, no issues with your intellectual property. You want to make sure that your intellectual property is secure and that assignments have been properly executed in favor of the company. There's a lot of these metrics, but none of it necessarily matters if you don't have a good location. So it really, some of it really depends, and a lot of these factors don't necessarily mean that they're deal breakers. It could just factor into the economics of your deal. So you definitely want to take a look at the very large picture in view of the dollars and where you are and scarcity, and it's so state specific. You certainly can't take a look at what's happening in California and say that translates to what's happening here in Connecticut. So you have to be really adaptable and flexible and willing to be trained on all of the different laws that will apply to your business.
All that's entirely, no, you can comment on that if you like.
I think that it's really important to point out that in this industry, we were talking earlier in the sessions today, they were talking about having a bullseye on your back. And so I think that it is really important to make sure that you're being very cautious through this whole process. So I'm just glad you made that point.
So from a fundamental standpoint, all those aspects are entirely what we look at as a baseline. Some of the other things that we focus on, not necessarily metrics per se, is more around sentiment and experience. So we want to understand that as an entrepreneur, you have a background in either building or scaling a business or a business unit. You understand flexibility and adaptability within a regulated market, which there still is flexibility within that type of a market. And also understanding how your organization is currently set up and what does the internal sentiment look like. So certainly need governance and proper oversight, but what's your employee turnover look like? So you could be the fastest growing company in the space, but you turn over 15 employees a year and you only have 20 on staff. Well, that might be a red flag for us that we're going to look at. Is there something internally around the culture that doesn't fit? And these aren't necessarily fundamental metrics that we look for, but they're really important for us as we're looking to help companies scale. And the last part that I would say, I've worked in regulatory compliance and I've advised some of the largest Fortune 500 tech companies. Regulatory compliance is not easy. Most of them don't do it well. So to expect startups in a nascent industry with nascent businesses to do it well is unrealistic. And I think the comments about knowing your regulators, being in active dialogue with your regulators. This is not black and white, even from a regulatory standpoint. So I think understanding that you have the right structure, the right oversight, but the ability to navigate that in the markets that you operate is really important. So does your team have a level of professionalism and experience to have those conversations? Or even better, have they hired the right professionals who can actually have those conversations on their behalf?
Yeah, but your team is only as strong as your weakest link. You know, if you have one person who isn't committed to regulatory compliance, that can kill your license. And in some states like Washington, if you mess up, you don't get a second chance. So picking your team is one of the most fundamental, aspects of building a good business.
And something that I'd like to add to that is, by the nature of the business that that we're invested in, you have to be very mindful not to invite. You want experience, but you can't invite a lot of people that have a great deal of black market experience, right? There's, one of the jokes that is fairly common in the industry is that I still haven't met the second best grower. Right? Everybody has the best grower in California and Colorado and Canada. And to be the best grower, the industry is a couple of years old, maybe in its iteration, depending on the state, you've got 4, 5, 6 years of actual growing experience. And so picking up a team, you have to balance in that consideration set that you want and need somebody that's good at their job, but doesn't drag with them a lot of legacy black market baggage. Because the biggest thing that regulators are scared of is diversion, right? That's it, plain and simple. They know it's happening. It happens everywhere. They want to keep it to a minimum. And so if you can reduce the indicia that would lead them to believe that there may be some diversion, then that's a good thing. So the constitution of the team, but being always mindful that it's that we do have that target on our backs, and we want to be extra squeaky clean right now.
So that's a good segue into a room full, I think, of MBA students here and maybe potential entrepreneurs in the space. So based on what you just said, the CEOs that you look at, not necessarily just the founding CEOs, and they may have been brought in as an operating CEO, you looking for industry experience? You're looking for experience outside of the industry in regulatory, complex, and fluid industries? What does that look like for you guys? Who are you betting on?
I'll start. I think if you can get experienced CEOs that have been and again, I think most of my comments will be colored by the investments that we've made and our interest in cultivation and the upstream portions of a supply chain. I don't really have any insight into the ancillary services markets that Emily will have. But if you can get it, yes, that's what you want. I think that one of the things that motivates us is CEOs that do have some kind of regulated products operating history. If they come from alcohol or tobacco, it's usually somebody that understands excuse me, the need for a complex and symbiotic relationship with a regulator. For me, this is a compliance-driven business, plain and simple. You're moving widgets, but the widgets have 5 levels of oversight that you didn't know existed. And so as you try to navigate, from the top down, it's compliance first. If you want to make a good product, that's great. And we all, as part of any business plan, you need to have that competency. But allocating a not, insubstantial amount of your budget to making sure that everything is in compliance, everything from your chain of custody, from your financial chain of custody, your dollars coming in, to how and where you move your product, is just, for me, it's, you don't get, Washington State, was it, that doesn't give you a second shot? Like, that's just it. Your reputation's gone if the top guys aren't impressing upon middle management, and then the ground level troops that, you have to double and triple down on your security, your compliance, your observation of any of these things that could very easily derail a business.
Emily?
Yeah, on the ancillary kind of tech side of things, startup founders and CEOs are a unique breed of human beings. They have personalities and egos, and they tend to be visionaries. And so the thing that I'm always thinking about is, what is the CEO today, and what is that person's role as the company gets to a certain size and looking at expansion? And Vinod Khosla always likes to talk about how he likes to keep CEOs in the business or founders in the business. And I feel very much that way too, because I think there's something to keeping the visionary in the business. But then sometimes there's this, like Tahira and I are on this board of a company, and we did bring in a later stage CEO to help really get that company into expansion mode. And it was a really great transition period to get that person shifted into the role and ready to kind of go and expand this company, and also then keeping the founding CEO in the company and moving more into his comfort zone and where he could be at this later stage of this company. And I think that that's what I'm often thinking about when I'm thinking about the CEO. And one of the big qualities for me when I'm looking at earlier stage companies like that is looking for a kernel of humility in a founder, because startups are brutal. It's hard work, and it's fast paced, and it's scaling, and it's growing, and you're hiring massive amounts of people at a quick pace. And so that kernel of humility becomes very important as you get down the line, and as you have to have difficult conversations about challenges that you will face in the business. And especially in the cannabis industry, there are hurdles that get thrown up that you don't always expect, like you might lose your merchant processing system because Jeff Sessions got up and said something about the industry, or your banking relationships become disrupted, or your payroll solutions become disrupted. And so just knowing that there's a person at the helm there who's got the humility enough to reach out and get support in those moments is really important to me. And so that's more of like a personality quality that I'm looking for in founders and CEOs.
I'm going to take that advice to my clients. But I agree. I echo what both of you said. And, what also, when investors are comparing one company to another and one CEO to another, what makes a CEO stand out in this industry is a profound respect and appreciation for the plant. So they really have to, accept its magical qualities and all that it can do for its medical efficacy. And also, we're really looking to change the world here. We have the Controlled Substances Act, which is rooted in racial animus. We are looking for people who want to push through that and want to be an inclusive and diverse industry. People who are really looking for that quadruple bottom line. And people in the hemp industry, they will go on and tell you that hemp can literally save the world. I mean, it can provide energy, it can provide paper, it can provide so many things that can, save our planet. Or I shouldn't say save our planet, because I'm hopeful that it can be saved, but that can help anyway, and to mitigate some of the disasters of global warming. So, CEOs that really have that vision, and they don't just see this as the green rush. They don't just see this as a get-rich-quick scheme. This is an industry that is at the very beginning, and we have no idea how big it's going to go. It's like a mountain of gold, and we don't know how big it is, and we can, there's a place for everybody. So a CEO who really respects that and knows their place in history and recognizes that this was illegal once, and we still have hundreds of thousands of people who are incarcerated for this. So they want to give back, and they want to make it right. And that, from our perspective, is what separates one CEO from another.
Evan, you want to jump in?
The only other points that I'd probably add to any of that is just that and it kind of ran through all the different comments, that they're thoughtful, strategic, and in many ways coachable. And that really depends on the company. We have founders that we don't really have to do anything with, and as the CEO of that company, because they have the experience, they know where to go, they know how to reach out when they need help. And then we have others that they have exceptional talent, vision, and they've built strong teams, but they do need a lot more coaching and guidance because they haven't done this before. So it's really making sure they at least have those three qualities where they need them, and obviously the rest of what you guys, everyone has said here. So yeah.
Okay. All right, guys. Yep.
Thank you. Actually wanted to piggyback a bit off of what Lauren just mentioned. So much of the cannabis industry is built on the momentum of social justice and equity, and these conversations about inclusion. And I wanted to know what that really means for the private equity space. Are there like set-asides? Are you investing in accelerators? How are investors ensuring or helping to facilitate people who have traditionally been cut out of having folks invest in their companies have a seat at the table?
It's a great question. It's a really difficult challenge to address depending on what sector of the market you're in. I mean, we talked about the absurd incarceration rates and how that's affected minorities more so than anyone else. Part of the challenge with venture is finding people who are looking for it and helping them get to a point where they can actually accept capital. There aren't enough programs out there to educate entrepreneurs that want to have access or want to have an opportunity. In Los Angeles, I sit on the board of the Los Angeles Cannabis Task Force and other groups that are focusing on social equity. And some of the programs just don't do social equity justice. In fact, they create problems for it. Rather than building infrastructure to educate, provide access, and afford the opportunity, they force different operators to maneuver their business rather than to incentivize them to bring others into the industry, which only helps the industry broadly. So, increasing women accessibility to founding teams and CEOs creates a whole different perspective on how a business operates. Bring in different diverse perspectives, whether it be from a Black entrepreneur, Latino entrepreneur. These are things that we haven't been able to really explore yet because there haven't been opportunities for them. There haven't been programs for them. So, there are ways that we get involved. We would invest in an accelerator. We haven't. Aside from not having a woman on our core team, we have 3, people of color on our team except for me. So that doesn't offer money to an industry that needs it or minorities that need it, but it's a start. And I think we're seeing more in this industry than any other that is trying to bring women and minorities into the fold. And so to me, it can't happen fast enough. And so what I would say is the more people that want to get involved and want to be active, it's not just saying we should have access, it's we should have access and here's how we want to help, get in front of you and tell us what you need. And to me, that would be the most important aspect is creating that partnership and working together to find those solutions. And we're doing that in LA specifically, even in industries that we don't invest in. And so I'm sure others are doing the same, but it's not easy.
So I know you guys want to jump in, but we only have a few minutes left. Yes.
Hi, I come out of the medical manufacturing arena, and when you talk through the metrics there relative to the ability to standardize compliance, et cetera, this is unique that I happen to be in that arena, but there's no startup that can, in fact, hit that metrics. Having bench strength, board governance, so there's a complete disconnect between a small group trying to get into this business and the metrics that's required for safety and compliance going forward. It can happen. Your point is basically correct. There's no ladder there in place. So there's a bifurcation here. The minority community is going to end at the end of the food chain. And at the top of the food chain is going to be the first screen we saw here with Viridian and others, in fact, where they have capital and equity, they can take the market. And the diversity and the problems of incarceration will continue because there's no equity going to be spread. Is that kind of in sum what's going on here?
I'd just like to say that Viridian held the first ever Cannabis Diversity Summit last year in New York. So we are behind this effort. So we're not on the other side of the line. I think it's an important social change.
Are you saying that you're responding to this young lady, or are you simply saying what?
Well, I'm saying that you seem to somehow put Viridian in a category.
No, I meant that as a quote, not a down.
No, I think this industry, and I think I'll speak for all of us, there's great female participation in this space. Women Grow has been a primary driver of that, but I think it's a natural industry for women entrepreneurs. And well, sure, but that's true whether you're a roach or you're a human being. You need capital. The industry screams. The industry screams for social justice. I believe that the reason behind the legalization in the number of states we are, I think Emily or perhaps you said it, Lauren, is not only the push to have access to medicine for children, that have epilepsy, like Charlotte Figge, but it's also for social change. And if you look back over the last 100 years and the pace of social change, women voting, black voting, gay marriage, those are accelerating in the time where they get legal at the state level and then legal at the federal level. We have an administration that's kind of in the way of that right now, breaking that mold. Other questions, please?
Can you guys talk about the challenges of the product on one hand being medicine and on the other hand being recreational, and if that raises any contradictions in the businesses and what you guys are doing and how you present your strategies, et cetera?
I mean, I see it as a spectrum, actually, where I feel like, and I think we're going to see a more defined differentiation around this, but I see the adult use side of it, which I think the word recreational is what most people use as a word, but I think it connotes that people are just like ripping bong hits and like getting crazy on cannabis. But it's really more just that it just means that people can use their driver's license like going into a bar and can acquire it. And I just think language around this area is important. So that's one of the things I try to kind of spread around. But I feel like there's a huge wellness aspect to this industry where people are kind of finding their relationship to cannabis in the middle between, pharmaceutical, really kind of anesthetized, clean resources of cannabis. I think that's very important too, and some certain ends of the spectrum of that. But I think that there's this very broad and generous aspect in the middle, whereas we heard this morning about our endocannabinoid system. I think that people introducing cannabis into their system, be it through CBD or other terpenes or cannabinoids, I think that they're just finding that their body and their mind feel better. And I think that that's kind of like right there in the middle. So I think that the adult use aspect of it is also kind of, a lot of people, again, it's all like anecdotal because we don't have a lot of studies around it, but I think a lot of people have used cannabis in adult use or a recreational way because it does make them feel better, just like having a drink kind of like takes the edge off. And so it's just an interesting thing, but I don't think they have to be in tension with one another. I think they can kind of live in that harmony on a spectrum.
We're all sort of brainwashed to believe that cannabis is unsafe, right? It holds the highest classification of a Schedule I drug. And we've been sort of brainwashed by the federal government in teaching us that this is unsafe, it's a gateway drug, and causes all kinds of problems for society, and that's just not true. So as soon as we can break through that, then we don't necessarily have to box ourselves into medical or recreational, and we can treat it like a wellness product. And it's just been completely overregulated based on the false, premise that it's not safe. And I think once people realize it's safe, that we're not going to have to lock ourselves in that way anymore.
Let's squeeze in one more. Yes.
Yeah, I was just interested in all of your guys' thoughts on the next 5 years in terms of more and more money flowing into the space based on changes in regulation and private equity firms being more and more comfortable in the cannabis space, and how that's going to kind of spell out winners and losers in the future.
Well, I think from my perspective, to piggyback on the question that was asked maybe 2 questions ago, people that can deploy capital will just invariably always take the lion's share of any growing industry. Unless you have some social engineering or some social or economic redistribution of these opportunities, it's just always the case, right? So institutions are locked out because of the tension between the federal and state legality. Retail investors are locked out because of their access to capital. So it falls in the middle, and usually that's where family offices, very nimble, fluid actors that have access to capital that can write large checks will just always step into any growing industry. It's always going to be the case, I think. I don't think that this industry avails itself to other mechanisms of finance like crowdfunding or crowdsourcing, just by virtue of its complexity and quite frankly, the litigation that's going to result from a lot of these investments down the road. What it looks like, I think that it's going to look, we've seen a couple of large-scale investments. Constellation Brands has certainly gotten into the market with a large check. That We have insight that there are a couple of other large deals that are looming where publicly traded companies, both with public owners of their debt or equity securities, are getting more comfortable around it. I think that it's going to look for a long time like any emerging industry. Private equity guys are going to go in. They're going to compete for the same transactions. Eventually, once retail money is available to go into the industry, yields will compress. Deals will become much more competitive. Once you're able to bank it successfully with large-scale lending, it becomes a commoditized industry, not just a commoditized product.
We actually have to wrap up. Just a reminder that the next session, which is Careers in Cannabis, is in the Zhang Auditorium at 4. Thank you to all our panelists.